Welcome back to the exchange. XPO shares trading near an all-time high, and they have surged more than 300% over the last year. The less-than-truckload operator benefiting from rising prices in that segment of the market following the bankruptcy of Yellow last year. XPO is reopening one of the service centers purchased from Yellow's liquidation today. Joining me now to discuss is XPO Chief Executive Mario Harik, along with our Frank Holland. Frank, take it away.
Deirdre, thank you very much. Mario, good to see you as always. I know it's a big day for XPO. It's also a big day for the economy. I want to start off about asking you about that hotter-than-expected CPI report and the fact that it may be putting some questions out there about whether or not we are going to get rate cuts. How does that impact your business? How does that impact the business of some of your customers, like an Ulta Beauty, a Ford, or a G?
Well, overall, rates being high, Frank, lead to lower economic activity overall and a slower economy. And we see that cost inflation in our business as well. But for us, given all the great work we're doing for our customers and given the state of the less-than-truckload industry, where historically we haven't had as much capacity, a lot of that cost inflation that we see in our business, we end up passing to our customers as well. But we'll see what the rate environment does. We're seeing the environment being stable, slightly improved as well where it was in the fourth quarter. And it's tough to call what the macro will do over the next couple of quarters here.
What about the rise in oil prices that seems that will translate into higher gas prices? How does that impact your business? And again, the willingness and ability of your customers to ship freight?
Yeah, so for gas prices, typically when we bill our customers, there's a mechanism where we bill what we call a fuel surcharge, or we pass on the fuel price fluctuations back to the customers. So typically when the fuel prices are higher, the customers pay a higher amount on their bill, and when it's lower, they pay a lower amount on their bill. So we as a company are not as impacted by it. And now, this said, for our customers, what customers value is great quality service. They want to make sure that we can pick up the freight on time, deliver it on time, and deliver it damage-free. And we have been delivering record levels of service levels, which means our customers want to give us more market share. They want to give us more freight to make sure they can get the great service that we are offering them as well.
All right, Mario, it's great to get your insight into the economy. Let's get to your business right now. As I mentioned, it's a big day for Yellow. You're opening up one of those service centers that you purchased from the Yellow liquidation there in Nashville. Talk to me about how that's going to help your business. I'm looking at less than truckload rates. Since we first heard about the possible bankruptcy of Yellow, they've spiked about 50% since then. How's that benefiting your business?
Yeah, so first, starting on the service center, it's a great day for us here in the greater Nashville market. We just opened up this week a facility here north of Nashville in Goodlettsville. We just had the ribbon cutting this morning here. And what that means is more capacity to be able to service our customers. And the immediate benefits that we would get, one is a service benefit. By having more dock space and larger facilities, we can offer better service for the customer. And the second one is an efficiency benefit. For example, here in Goodlettsville, we used to dispatch drivers up to an hour from Nashville to pick up and deliver freight in Goodlettsville. And now they're driving 5 or 10 minutes to get to the customer location. So that leads to higher efficiency and better service. And on the long run, we're investing in capacity in growing freight markets like here in the Nashville area. And this will enable us to handle more freight over the next 10 plus years to come.
You're also looking at cross-border traffic, specifically moving freight from Mexico as part of nearshoring into the U.S. Looking at the latest figures, in February, a 13% rise in cross-border freight movement from Mexico. You also, in this liquidation purchase, you got a service center near the Mexican border. Talk to me about reshoring and your business when it comes to that.
Well, Mexico is a very important market for us. And as you said, Frank, there's a big trend in what we see, especially with industrial companies, is nearshoring their manufacturing. So they're either moving manufacturing to Mexico, somewhere in the U.S. or in Canada. And today we can cover all of Mexico. We cover all of Canada. And one of the service centers we bought is in Nogales, Arizona, which is right across the border from Nogales, Mexico. And we already have customers lined up where they're moving some of that freight from Mexico into the U.S., and they'll be able to leverage that new facility. And for Mexico specifically, today we have 7 border crossing locations. These are in areas like El Paso or Laredo or Southern California, where we can support our customers' needs as they nearshore more of that manufacturing. We can help them move that freight here within North America all the way to Canada and vice versa.
You know, not only are U.S. companies looking to Mexico to move operations and manufacturing, Chinese companies are as well. Obviously, there's a lot of news this week with Secretary Yellen in China. One of the things she said is that these Chinese companies, they can sell their EVs here in the U.S. I'm just curious, have you heard more from Chinese companies that are looking to nearshore closer to the U.S. market?
Predominantly, our customers are North American customers. Today, we service more than 30,000 companies across North America. We haven't heard a lot of Chinese manufacturing moving over to the U.S., but what we've heard more of is existing customers that are U.S.-based companies that are moving their manufacturing plants from Asia or other places here, either in the U.S. or in Mexico or in Canada as well.
All right, Mario Harik, your shares up 300% over the last year. Congratulations to you. Deirdre, back over to you.